Welcome back, guys. Hope you're all having a great day out there. Crypto-backed home loans. Fannie Mae, Coinbase, here today, jumping into the ring. Now, how to borrow against your XRP. I want to discuss that. What's going on with the Clarity Act and all of this, what it means for the price of XRP. If you do like talking about Ripple and XRP, drop an X in the comment section, smash that like button, and let's get into it. Now, I was going to do a video in the backyard. It's fairly nice out. Sun is shining, but real windy. Not the best for the overall sound quality. So we're back in the car. Might do one in the office, but I like to switch it up. And guys, after all these years, I still love doing car videos. I truly do. Now, as we take a look at what just came out here today, $4.3 trillion mortgage provider Fannie Mae to accept crypto-backed loans. The Wall Street Journal reported that. What does that tell you right away? It tells you essentially all you should need to know about what these massive multi-trillion-dollar institutions are looking at crypto as a store of value and the way for the future. And a lot of people right now get it right. The price isn't great. The volatility, what's going on over in Iran, what's happening with geopolitical tensions, what's going on with the uncertainty out there, has the market suppressed. But these multi-trillion, $4.3 trillion mortgage provider Fannie Mae says we're going to now accept crypto-backed mortgages. And it doesn't stop there, because Coinbase has partnered with Better Mortgage here today to launch crypto-backed loans as well. Now, Brian Armstrong put, get a mortgage backed by Bitcoin or USDC right now. We also know with Coinbase, you can actually borrow against your XRP right now to get a loan. And I saw an article here today talking about how to borrow against XRP. These are some of the best platforms for XRP back loans in 2026. And full disclosure, I am not sponsored by any of these companies, but I just wanted to give this to you guys so you know some of the options out there, and I'll link this below. But in this article, they write, XRP has long held a specific place in the crypto market. Unlike Bitcoin, which is often framed as just digital gold, or Ethereum, which powers smart contracts, XRP was designed around payments, fast settlement, low fees, and cross-border transfers. That positioning has shaped its user base. Many XRP holders treat it as a long-term asset tied to institutional adoption and payment infrastructure rather than just short-term speculation. Now, this creates, they write, a practical question. What do you do when you need liquidity but don't want to sell your XRP? Selling means exiting a position you may want to keep. Borrowing against it often is an alternative. And so what does it mean to borrow against XRP? Let's break it down. An XRP backed loan is a simple mechanism. You deposit XRP as collateral, you receive cash or stablecoins in return. The platform holds your XRP until you repay the borrowed amount. So the amount you can borrow depends on the loan to value, LTV. And if you borrow at 20% LTV, every 1,000, as an example, of XRP allows you to borrow 200. So of course, at 50% LTV, the same collateral would unlock 500, but with higher risk and usually higher costs. So this structure is similar across platforms. What differs is how interest is charged, how flexible repayment is, and how efficiently you can manage the position. Now, why do XRP holders use loans instead of selling? The demand for XRP backed loans is not theoretical. It comes from specific reoccurring situations. One of the most common is timing. And I'm going to link this down below in the description, by the way. But markets rarely move in a straight line. Selling XRP during a downturn to cover expenses locks in losses. Borrowing allows you to wait. Another use case is capital efficiency. Traders and investors often want liquidity to enter new positions without reducing existing exposure. A loan lets them do both. Now, there's also a practical angle here. Everyday expenses. Crypto is increasingly used as a store of value, but expenses are still paid in fiat. Loans act as a bridge between the two. Now, a simple scenario here as an example, let's say you need $1,000 without selling your XRP. Suppose you hold 5,000 worth of XRP and you need $1,000 in cash. You have two options. You can sell 20% of your XRP, or you can borrow 1,000 against your XRP. So if you sell, your exposure is reduced. If XRP rises later, you participate in less of that gain, of course. Now, if you borrow 20% LTV, your full position remains intact. You still hold all your XRP, but now have limited liquidity. The trade-off is cost and risk. If XRP drops significantly, your LTV increases. You may need to add collateral or repay part of the loan. This is where platform design becomes critical. Now, some of the platforms here that they talk about is Clap. They talk about Nexo, CoinRabbit. You guys have probably heard of some of these. Obviously, Coinbase allows you to get a loan. But this is a really big move on what just came out here today. Fannie Mae and Coinbase, but Fannie Mae, I want to focus on them for a second. $4.3 trillion institution stepping in. What does that mean for the legitimacy, the liquidity coming to this market, demand coming to this market, stepping into the ring regardless of what is currently going on with the Clarity Act? Guys, they know exactly what is coming for crypto. Otherwise, they wouldn't be allowing crypto-backed mortgages. Great development to see this here today. Great to see for the overall space, and absolutely a win for us all. Those are my thoughts, my opinions. Let me know yours in the comment section below. I'll have iTrust Capital link below if you need institutional grade custody over your assets. And I will see you all in the next one.